So over the weekend, I saw this really cool post by my friend Tradeseekers, which you can find at the link below. And he's got a ton of really great indicators and trading tools that you can find at the link in the description below. And this latest one that he came out with really caught my eye because it's something that I've been thinking about and wondering how I would handle since we're at the all-time highs here. And like, how do you really set profit targets? Not only because it's all-time highs, but just in general. I've been looking for a tool I can put on my charts that's just really quickly gives me an idea of what I can expect movement wise throughout the day to kind of give me a bearing as I trade throughout the day. So he just came out with this post on an indicator that he just finished creating. And I wanted to get him on here and just walk us through it and show us all the tricks on how to use it. So I'm going to hand it over to my friend Trade Seekers here and take it away.
Yeah, so I guess like you said, this tool is so I'm big on projections, taking historical data and projecting a range so that we can trade it. So this one is called Anchored ATR Range percent B, and you can see it's posted by Tradeseekers. That's me, and we can just go ahead and add that to the chart.
So they can just go to TradingView and do a search by trade seekers and find that.
Yeah, if you search Tradeseekers, you might find quite a lot. Of course, mine's going to have a bunch of things. It's going to be difficult to show, but yes, if you go to the indicators and you type in anchored ATR, like you'll probably find it. Like I
Okay.
think it's the only one where ATR anchored, whatever. There's not very many. This is the only one, so it
Okay.
should come up pretty simply.
Yeah, and I'll put a link in the description below too,
Yep,
so to make it easy.
absolutely. The idea of percent B actually it kind of comes from Bollinger Bands. John Bollinger wrote the Bollinger percent B. I don't know if you've ever messed with that, but the idea is it shows you within the Bollinger Bands where price is. So the closing price, for example. And so there's a handful of things that have taken the same concept, and that's effectively what I have done. So this is showing you the closing price of the bar within the range. So by default, this is looking at the time frame of a day, so 1 day and 20 days back. So the idea is that if I go to the daily chart and we look 20 days back, so here's, I guess because we got weekends in there, it's going to be 21 days. But the idea is what is the average size of each of these bars or candles? So you'll
Mhm.
see each one of these. This is like 38 points. You can see it up here, 17, 27. So basically taking the high to the low and subtracting the two, you get a number. And for each one of these, you'll have that number, and then you average it out. So that's what we're doing is we're taking the average high to low range for the last 20 bars. We're doing that math, and then we're basically projecting that. So if we know the ATR, the average true range, is 40 points for SPX, then when the day opens, which would be here, we could either go, now I'm just picking a number, but we could go 40 points up or we could go 40 points down. I can't really fit that on the screen. So something like that, that could be our range. But since 40 points is the total range for a day, then what I actually do is split it. So at the open, we've got 20 points from open to high and 20 points from open to low. So then together that becomes your kind of your playground. That's
Right.
where you could expect SPX to stay. Okay. So that's the premise. That's the data that's being measured. So you can come in here and change this, but we'll leave it at 1 day time frame. So we're counting 20 daily candles. And now by default, the overlay isn't shown, but definitely is kind of where you see the information kind of come alive that you're seeing down here. So it just depends on your preference, if you like lower studies or you like upper studies.
Right. Now, real
And
quick, on the
uh,
lower on that lower study, the we're reading. Oh, I guess first of all, the percent B. What is that important to know what that means?
so yeah, like if you go to Bollinger Bands percent B, this is where again, this is kind of where I got the idea for the naming convention.
Hmm.
So if you put Bollinger Bands on your chart, a lot of people know what Bollinger Bands are.
Yeah,
So the bands.
I've always used Bollinger Bands, but Bollinger Bands percent B is new to me.
Oh, okay, no worries. So yeah, so the Bollinger Bands percent B is just showing you where the price is within respect to the bands. So like here's the close, and here's the close down here, and then the top red line here that's flat,
Hmm.
that's actually the upper band. So
Oh,
it's a way to show you the bands without the bands moving around. It's just the price that moves around.
I
And then
see.
you have, in the case of Bollinger Bands, or you're doing two deviation as your high. So it's I guess maybe a little bit confusing, but this is like 100% of the move. And
Right.
that's that, so that you can kind of tell, right? The price is moving within the band. So that's what you're seeing on this percent B indicator.
Got it.
It's that price alignment.
Yeah. So the numbers on the right of that lower panel where it says like from 1.00 to wherever,
Zero.
that's
Mm-hmm.
just it does 1.00 equal to the top band?
Yes.
Okay.
Yep.
Got it.
Yep. So that's just the idea. It's a way to, instead of showing you like these bands that are just moving all over kind of chaotically, they're just flat here, and then price is rendered per its position within the bands. So it turns it into like an oscillator, I suppose, like RSI.
Right.
So it's kind of the same thing. Um, so percent B is what this was called, and so I wanted to stick with something that's relatively familiar with the trading world, the
Right.
indicator world. And so I just went with percent B for this. And I'm not even going to show volume, actually. I'm just going to delete that. And so it's ATR anchored range, and then it's percent B, meaning the line that you're seeing, this line plot, is the closing price relative to the range that this thing will plot on your chart.
Got it.
So when the pink plot is at the midpoint of this lower oscillator, it's at the open price by default. This is anchored to the new session, the open price. So you could, in theory, just use this down here, and you don't need the overlay up here.
Okay. Got it.
So if you like a clean chart, some people don't want a whole lot on their chart. Does that make sense?
Yeah. 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 Got it. That's cool. I totally get that now.
Okay. So to look at this overlay, like what is it actually showing you? So again, we're calculating on the daily time frame, 20-day candles. What's the average high to low? When we subtract the low from the high, what's that number over the last 20 days on average? And so for SPX, we're looking at 68 points, we'll say, on average. So a 1% move. So a 1% move every day on average for the last 20 days. So that would be considered one ATR move. And so by the time one ATR move is made, it's probably a good time to start settling up your trades. Don't expect another 20 points higher or lower from wherever we're at if we've extended the full ATR. And so the way that I use this is because we don't know if the daily candle, the daily candle might end up just having no wick at all. So it could be something like this with no bottom wick. See if I can find my line tool, and maybe just like a little top wick. Okay.
Mhm.
And so then the ATR measurement would be from the bottom, the open, to the high, which would be like up here. So then we would say, okay, this actually exceeded the ATR movement, but it finished within one ATR, which would be this. So the way that I use this is once we open, I already consider the day's open price very important, which is why I have this set up by default to anchor the projection of one ATR on the open for this session. I look to see how is the open price being respected. Are we bouncing it? Are we breaking through multiple times in the first half hour or the first hour? And if we are holding it, then I start taking a more of a bullish bias for the day. And I'm going to start setting my sights on this line here, which is half an ATR, because again, from here to here is one ATR. And then from open to this line, which is the extension, this is also one ATR. And then likewise for like a down day, then it would be from the open down here for one ATR. So, after about an hour, like 10:30, I'm going to start considering bullish positions. I might even scalp this up and take something here for the day. But, we don't want to see the open price traded a ton. And it's a different subject, but you can kind of keep track of that on a monthly, quarterly basis and kind of determine some stats for yourself. But basically, you want to start thinking about using this for, you could either place put credit spreads, you could place flies on these lines. There's all kinds of things you can do. But the most important thing is like, how far could we go? More than likely, we're going to stay within one ATR. And so as the day progresses and we don't come back towards this open, I pretty much will consider that the whole day's range is set, and it's going to be from open and probably no more than up here, one
Cool.
ATR. And you could see on this last Friday, it was very accurate.
Yeah.
We just barely
Perfect.
missed one ATR.
Now, do you typically see, like in this case, you mentioned like once it ran up and hit that first ATR, that first extension there, that you may
Mm-hmm.
have scalped that.
Yeah.
I interpret that as that may be a typical reaction once it hits that first one.
Yeah, sometimes it can be. And I think, I don't think I'm the only one in the market that's tracking ATRs this way. In fact, I have seen some content from professional traders, and they run floors and they all talk in terms of ATRs.
Hmm.
So it's certainly, there's a, a large group of the market participation that is using this. Well, maybe not this indicator, but their own form of it. They
Right.
might just be keeping track of it manually. Who knows? Um, but yeah, these kinds of reactions I would expect on half ATR and whole ATR moves.
Hmm.
Absolutely.
Cool. That's good to know.
Yep.
And
And
then you also,
also, oh, go ahead.
oh, well, you also mentioned like around 10:30 or some time frame, like say midday maybe. You meant that if it hasn't broken below the starting point,
Mhm.
you're sort of more apt to maybe think that it's going to stay above that level, or is that not
Yeah.
really correct?
Yeah, no, so I'm a big believer, and again, I guess it'd be a topic for a different day, but in the initial balance range, which is that first hour of the market's regular trading hours, so
Mhm.
from 9:30 to 10:30 Eastern, I'm a big believer in that. I watched it for years, and it often sets a tone for the day. So one stat is once one side of the hour range breaks, it's usually it's a low probability that it's going to double break, meaning both sides.
Mm.
So it's about a 76+% chance that it's going to only break that high for the day. So I tend to kind of use that in conjunction with this, but you can also just look at the open. So if you start to see some bullish price action, lots of wicks collecting a strong base and a breakout with like three solid candles, then I would definitely start targeting this upper extension range and considering that the low of the day is in, which happens to be, roughly the open price. I mean, it's actually slightly down here, but then I would expect that one ATR that we can expect SPX to play in is going to be basically from here to here and probably no higher.
Right.
So like I wouldn't start to swing as like an intraday trade. I wouldn't start to swing 6,700 or, anything like that. Like if anything, you could buy this strike and sell something, lower so that, by the time we hit this, the call you bought would be way in the money compared to the one you sold. So
Hmm.
that kind of thing. It would still be really cheap, you know. But yeah, like in a nutshell, it's actually fairly simple to use. You can use this for like an intraday trading setup. Uh, this is how I use it.
Okay.
Now, another adjustment you can make. So one of the things about averages is they're not as adaptive to volatility. So if we like what we had Friday before last, we kind of had a decent down day, and then that's going to kind of blow out. The market's obviously going to start making wider moves than the past however many weeks. So one thing you can come in and do, and you can play around with this, but you can adjust your period time down to be a little bit more adaptive to recent price action. So you can set it to say like 5. So sometimes it makes a dramatic change and then sometimes it doesn't. And it really is going to depend on your preference. So over just the last 5 days, the average range you can see is far greater. So we were at 68 for ATR over the last 20, but in the last 5, the ATR has actually been 100 points. And then in that case, this last Friday, we actually had a half ATR move if you're trying to be,
Mm.
a little bit more
Yeah.
reactive.
Right.
So more of a squeeze day, which makes sense because it was an OPEX day. So, but it's kind of crazy. It almost doesn't matter what you pick as long as you're comfortable with whatever configuration you've got. Like these levels will still be very effective.
Now, so for just this layout that we're looking at now, that lower panel and then those four lines there,
Mm-hmm.
what do we do with the indicator to show just that?
To
Does it
show just the bottom.
no, just the bottom? Well, if you want, I'm just thinking that I'm thinking that we may build more and more stuff on it as we dig deeper. So I
Yeah.
just want to kind of get an idea of how, if I want to just have this layout when I trade, just the
Mm-hmm.
lower pink line there, and then the four lines, or the five, I'm sorry, the five lines on the chart.
Yep.
Is that by default, or do I need to turn something on in the settings?
Yep. So by default, it is not on for the overlay. You'll have just this down here. And if you want to show the chart overlay, you open the settings by clicking I guess that's a cog. It doesn't look like a cog as much as other software, but and then that's the fourth option down, show chart overlay, and it will it will bring all of the lines that you see down here. It transposes them up to the main chart. And then if you don't want to see the lower study, you have the option of collapsing it. You could also double click the chart, the main chart on Tradingview, that will hide all the lower studies. So if you have multiple lower studies, you may just want to use this.
Okay.
So does that answer?
Yeah, yeah. And just something that you said that made me notice that. So when the overlay is on the main chart, we also have lines appear in that lower panel. Is that correct? And those just correspond with where they are on the upper chart?
Yes, exactly.
Okay.
Yeah, like in theory, you could just use this. If you,
Right.
wanted to just keep it very simple. Some people really like a clean chart. They don't want anything on the actual candles. And so this allows that.
Right.
So like right here at 320 on Friday, I know, just because I can see the percent B line down here, that the ATR is met basically right there at 66.78, and it's probably slightly off, but so yeah, so there's the line. So I can get that just from this percent B plot down here.
Yeah. Okay, cool.
So you have this, and this is for intraday, I would say intraday analysis. You could use this if you're a 0-day trader, and you can use this for any stock. It doesn't have to be SPX. You can use this for NVDA. You could use this for Tesla, and you'll find good confluence. And so, like, this is kind of a good example of looking at a stock. So one ATR would be 18 points for Tesla. And so you'll notice that we spent some time above the high here, and then we broke below this half low ATR line, and we extended just a little bit lower. But if you notice, from this low to this high, what is it? It's 18 points. One ATR, 18 points.
Yeah, that's really cool.
Yeah. So again, you'll have to watch this for a while and get used to it. But there's all kinds of things you'll notice. Like, okay, we didn't hold over the open. We traded it for so much during this open session. We finally went below. And it's like, okay, I can try to start targeting this line, but in reality, the high of day is actually beyond what would be like our low point for our daily candle,
Right.
and or the high point rather for the daily candle on a bearish day. Open would be our high. And so then all you need to do is figure out like what that one ATR size is using the measuring tool. And maybe I'll update the script to show it. But then, so you could just very simply say, okay, well, where is the one ATR going to take me then if this is the high of day? And so it would actually be right about where the low of day ended up being on Tesla for this day.
Right.
So it's a very good visual reminder, to not expect too much out of a particular day for a stock. So,
Yeah.
all right, so that covers day trading. And now what we can do, I'll go back to SPX. And then what I would say is we can go to, let's just go to the daily candle. And then you can come up with all kinds of different combinations. So for example, you can go to 1 month, and then you can do 12. So 12 months gets you a year. And then you could probably head down to, I like to use 65-minute chart because it breaks it evenly. Actually SPX is a little different. Let me use SPY. SPX is funky, it has extra candles. But for SPY, you get most regular things, you get 6 equally time-sized candles. And so here you can use this as a means to determine over the course of a day, or sorry, over the course of like many weeks, like where we might be able to go. So you could potentially use this for swing trades. You could use this for managing all kinds of things, even longer term holds. You could set up all kinds of configurations. So this gets you across a year's worth of monthly candles. What's our average move in 1 month? And so for SPY, it's going to be 35 points. So on SPX, you just scale that up. And like for the month of September, that's 35 points. And you can see we really didn't flirt with the open for the month of September. We didn't flirt with the open that much. In 1 week, we traded it, a handful of times, and then we were done. So it's a pretty good signal that we could target up here, up there at the highest. So we didn't quite make it, obviously, but that's fine. The idea is that you get this as your total range. So if SPY's up here, that's not a good time. For example, I wouldn't consider it a good time for me to go long on SPY.
Right.
If anything, you could, I might look at, for myself, like call credit spreads or, something like that. Maybe even just puts. And you can combine this so that, like, for a given day, if on a monthly time frame where we're at, and you see back to the 1 day 20 period intraday trading, you know where we're at from a monthly time frame, like we're pretty overextended, then I might really start to trust when price breaks inside of a day, starts to break below the open. I might really start to trust that it's going to be more of a bearish day and maybe be a little bit more aggressive. And you could set up a layout with 3 different charts if you wanted to. Depends on how comfortable you are with that kind of thing. But just to kind of have like a battle station of ATR multi-timeframe kind of analysis type thing.
Oh yeah.
And then you could zoom it into a week and set it to a period of 4. So maybe toss that on like a 15-minute chart, and you can start to look here. So this gets you 4 weeks in a month. So on average, what are we doing in the terms of a week over a month period? And then you can kind of trade that. So every week this will reset, and then you get to see like from a weekly view. So if you're somebody that likes to trade within the context of a week, very short dated contracts, then this might be something to use. And this would definitely be powerful to align with the default settings. So you could do, so we'll leave this one over here on the week, and then we'll set this one back to the default of daily times 20, and I'll put it back to 15-minute chart. And we'll just make sure we keep the time in sync. And so, for like Friday, for example, you can kind of see that there was pretty decent alignment up here for like the weekly ATR high.
Right.
And it's pretty close. So you can start to see those things. Same thing here. It's like, well, hey, we're really struggling with the open price here. Why is that from a daily perspective? But then you look over here and you're like, oh, well, that's the high ATR on the 1 week, last 4 weeks average ATR.
Right. That's cool. That's great.
Yeah.
Do you have a particular
So
setup that do you do this? Do you do multi-time frame, or do you
yeah,
just one?
yeah, I do.
And
And
what time frame do you use?
so if you go to, let's go to about this script page where I wrote up all of the criteria of like how to use this, why would you use it? And somebody actually asked this in the comments. And let me see if I can find it. So this is the setup that I use. So I use the daily over five past days. So it keeps it very reactive to all the crazy stuff that's happening all the time. And then I use the 1 week over the last 4 weekly candles. So that kind of gets me a monthly time frame. And then using monthly candles, the last 12. So that gets me kind of that year. So it kind of mixes it all together. I get a pretty good perspective across a handful of time frames and historical data.
Right.
And I really enjoy this setup. And I have like I have a 3 panel setup that I refer to. So the X button's hidden right here.
Right.
So, yep. And I don't necessarily look at them like simultaneously all day. Like I'll have one full screen, and maybe before the market opens, I'll take note of things like this. So like the day before, like let's say it's Thursday morning before the market opens, I would look back and say, okay, we had a pretty strong rejection off of this weekly ATR line. And so then when I come back into Thursday, knowing what happened on Wednesday, I'm going to be looking for this open price to reject. And I might even start to toss on some stuff for down here at the lowest point, because flies and things are going to be dirt cheap. So I've had some flies that only cost me like $15 on SPX. And,
Yeah.
when by the time, especially if it's a slower day, by the time it gets down here by like 2 p.m., that sucker will be worth, at least $150 a lot of
Right.
times. So that's a pretty good return for doing nothing more than just checking what the math shows and putting something on.
Yeah.
And I do it quite often. So it's been a very good tool.
Yeah. Now, I guess just with the I was about to ask, do you usually see it hit those, like say it's 40 points and it usually hits that? But of course, the answer to that would be, yeah, most likely because that's the average range, right? But you
Yeah.
feel pretty confident in placing a butterfly at that lower level in that kind of a situation that
Yes.
most of the times it will hit that or at least get close to it.
Yeah. I mean, and that would be the thing. So like I trade a lot of SPX 0 day. Um, the unfortunate thing is like if I've experimented with selling like deep in the money, uh, like calls. So if you sell a deep in the money call down here, it's already, deep in the money because we're up here. So you sell it, and by the time we come down here, it's going to have lost a lot of its value. So that's another way you could do it. And sometimes that edges out doing a butterfly because, unfortunately, like if you put a butterfly on here, or sorry, forward here, back here, like in the morning, it might not, like if it, and then this drop happens 30 minutes later, it's probably not going to be worth much more. Like, because
Mhm.
those two center sold strikes there's a lot of work that has to be done on the chain. So you really want it to happen towards the end of session for a fly to really work out. So selling in the money calls has actually been something that I've been telling a handful of people about for using this kind of data, and it's actually quite lucrative because by the time we get down there, those things have been, it's mostly a bear call, but you do have a long leg to protect you, but it loses a lot of value on a drop like this.
Yeah.
So
So would you so you say sell a call, but you mean like a call spread? Like you always
yes,
yeah, you always leg it off.
yeah,
Um
oh yeah.
so you and so you would just would you put it like right at it, right inside it or right outside? Probably what, inside it or at it at the
Yeah,
spread?
so I've been kind of experimenting, so I guess fair warning. It's like just
Hmm.
trying to find the best way to capitalize on these because like even this day you can see we bounced and came right on it and then came back in. So, I tried flies. Sometimes the flies don't work because the price comes in too early in the day and theta hasn't a lot of things haven't panned out yet on the premiums. So Yeah, what I've tried to do here lately is like instead of selling this down here, if it could be like 10 points further up, is still really good risk to reward. So at first I started and I was paying like, or rather, receiving credit such that my total risk was like $15. And what would happen is if the move happened too slowly, like it would just kind of edge out the fly, but it still wasn't a lot. And so what I figured out is like if I expect the price to come down here, then I might sell this so that by the time we get down here, like it's going to be nearly full profit. But it depends on how much risk. I have my total risk allotments and I try to stay within those. So somewhere around here, expecting it hits here, and then just whatever you're comfortable with.
Right.
So
That I liked it a lot.
yeah, yeah, it's pretty cool. And I mean, I have some other stuff that I haven't shared yet. So I'm still kind of deciding how I'm going to do that. But like this tool is the foundation for a couple of other things. But this alone, I think is it's a pretty powerful tool. When you put it on your chart, it's kind of hard to not see like how powerful it is.
Yeah. Yeah, it's great because it maps out the, like you said, the playground,
Yeah,
which a
yeah.
lot.
It's like if we go back to before the Friday dump, when we're at all time highs, coming in like last October 3rd, for example, there's nothing over here. So you've got no support. You got no, I mean, I guess you got a little support, I mean, but you don't have any resistance. There's no price over here. It's never been traded before. So what are you supposed to do?
Right.
So, here we come in and it's like, well, with this tool, we might be able to expect at least this and maybe this. So we can see we really started to cluster on October 3rd and really just not going any higher. And
Yeah.
so when you start to see that, whatever you're comfortable with and whatever your capabilities are, you might even start to try to defend the position or just take it off. You could start thinking like maybe we're going to come back to open and put something on down here from up here. So usually with this, the way I end up finding myself is that I have enough profits by the time we make it to one of these levels that I can sprinkle on a couple of other things to kind of hedge the position, um, or just close up shop.
Right. Yeah, you could take some of the profits from the positions already in money and like add some up there, like you said, sprinkle out a couple more. Is that what you mean by
Mm-hmm.
head? Or
Yeah, yeah. Like so, like in the morning, you get this nice wick test after a strong. I like to use a 5 minute time frame, and we see these strong candle rejections, like the wicks right off the open, and we start to come up. Like, that's a great time for me. Like I start putting stuff on for like up here, and then when I start to see us, we had a pullback, and then again like three strong candles. You call this a hammer candle, strong wick, and then we start clustering like this. We don't have the same momentum as what we had when we created the initial balance and when we got up here. And so, after because this is a good like half hour. And so after about a half hour, I start trying to manage the trade because the SPX or S&P, whatever you want to say, like for me anyways, like I tend to start managing things in 30 minutes, just how it seems to work out,
mm,
at least right now. And so yeah, I would start to either defend this position with hedges or take the profits and sprinkle something on for these outer areas because you just never know what's going to happen in this market. And like flies for down here are dirt cheap, for example. Not so much here, but open, they'd probably be pretty affordable, and you could even probably like once we come down here, you could be like, okay, I'm going to put one on for up here. And if it doesn't hit, then, it doesn't hit. But
yeah, it's like $5, 10 bucks.
yeah, yeah. And for holding open so well all day, like that's probably where I would look to put something on. Because again, I'm expecting at this point the open to be the low a day. And for one ATR, that's going to send us up here. I mean, it
Hmm.
didn't work out this day, but um,
Yeah.
ended up breaking the open rule that I have and kind of completing the ATR on the opposite half, which it happens. So
Yeah. This is great. I'm gonna start using this first thing Monday. This is really good stuff.
yeah, and I think it helps people, like that I've showed this to. It's like it really helps them understand that you're trading inside of a daily candle. Like I just think that perspective is so helpful. Is that you're inside of a daily candle, and you're part of the market that's building that daily candle that you'll see at the end of the day.
Right.
Um, and so I'm always thinking to myself, is like, well, is this is this or where's that one day that we just went over? I think it was this day here, and it's like, is this the high a day? Is this the low a day? And it's just kind of always doing a gut check with yourself, and like where would the body of the candle be, and the wicks and all that. So you kind of just turn all the price action into a candle in a way. So that's kind of how I look at it. It's just one big candle, and we're trading inside of that until the end of the session.
Yeah. Yeah, we're
So
diving into that candle and seeing what's inside it.
yeah, exactly. I mean, it's like there's a near infinite amount of ways to make a daily candle from the inside. So I think it's good perspective for people to realize that they shouldn't expect, 100-point move every day from something that only moves 50 points.
Yeah.
So those days
Right.
are rare.
Yeah, that's something that I've really, in fact, it was a comment that you made in the Discord that mentioned something about, maybe you should, because I was complaining tongue in cheek about some of the butterflies and structures I had that were way outside on either side, saying, man, I wish, I wish I could get some of this profit that was out there. And you made a comment that's like so obvious now when I started thinking about it, but it was basically this, I mean, there's ranges that these things are playing in, and you should try to see if you can capitalize inside those ranges rather than not have any idea like what I was doing and putting these structures outside of it.
Yep.
And so that's just really helped me a lot, pull them in and just start thinking more strategically that way, like place these or do my best to place these things, these outer structures inside of these type of ranges.
Yeah. Well, that's good. Yeah, I think it's just being efficient with your capital, right? Like if you have a set amount of risk you're gonna put on each day, and then like the way you trade, where you're kind of going with the ebb and the flow, and almost being contrarian in certain ways to try to kind of trap the market and create a nice profit zone. Like I could see this being good for you, is like, if we break below the open and we really start pulling down, it's like I could see how you could use that as a trigger for your strategies to really start focusing, maybe not up here where things are cheap, but start focusing down here where they're still cheap and where we could realistically get to. And then like once we get there, because that's the other thing, is once we're here, there's not much expectation that we're going to go any lower. So you could start feathering in, like put credit spreads down here,
Right,
or maybe even targeting something up here, expecting that we're at least going to hold this and maybe we'll float back up.
right,
Because
exactly.
then, this from here to here would be our one ATR range. So
Yeah,
that's exciting to hear. Yeah, I think it'll really help.
yeah, it'll be a big game changer for me.
Yeah.
I read through your description of this when I first saw it, and then I read through it again real quickly before you got on. And it seems like there's things that are mentioned that we haven't hit on yet, but I may be wrong. There was the golden Fibonacci thing I thought that sounded interesting.
Yep.
There's something about a gray area, and I wasn't quite sure. Is that what we're already been looking at, like a gray area where it should fill?
Yeah, and it's probably just very light because I use a black I use a black screen
Oh,
background.
okay.
But it also, so the other thing too. Okay, here it is.
Oh, I see.
Yeah, yeah. So that's the gray area. Yep. So this is like a normal one ATR. is everything between here to here.
Mm-hmm.
And so a lot of the usefulness would be to, play inside of that range. But again, is like I really put a lot on this pivot here of the open price. So a lot of my strategy and how I use this is all based on that. Because the market, if you think about a market, the open price is what's advertised, but as soon as the auction starts, the price that everybody starts at usually doesn't last. Like, I don't know if you've ever been to like a cattle auction or any livestock auction, but once that auctioneer starts blabbering all the different numbers and throwing his fingers out and everybody's got their number they're putting out, it's like that open price is done. Like, it no one's coming back to that. So I usually trade with the idea that this is an auction and there are bidders. There's bidders and there's the bid side and the ask side, buyers and sellers, that kind of thing. And so eventually the market's going to get along and decide they're going to go either higher or lower for the day.
Right.
But yeah, the gray zone is right here. And if if we want to talk about the fib zones, like I'm good to talk about that. I put that in as kind of like an extra thing because I do see reactions at those. And then I put out another indicator a while back, and somebody just went nuts with it and wanted all these fib related things. So I thought it would be good to add in here.
Okay. I think that'd be great. I saw you writing about the golden fib, or what was it called? You named it?
Yeah, it's called the golden pocket, which I did not invent that term. That's an often used term from Fibonacci traders. Um, and really what it comes down to is actually very simple. So let me use yeah, that's not going to be a good one. All right. So for anybody that's used the Fibonacci tool, if you've not, that's all right. But the idea is that you find some kind of move that you find significant. And so then you would use the Fibonacci tool, which maybe I can just apply defaults. There, that's going to be a lot better. Okay, this is way better. So you would, like, say this move from this low to this high. So let me just redraw that. So you would start from the low to the high, and you could just drag this out, pretend the rest of this price action isn't here yet for the day, like we're up to here. And then you would draw this out. And there's a lot of range theory for the markets, like any move, once 75% of it's retraced, it's probably going to continue in the original direction. So it's kind of like the zigzag theory of the market. So there's a lot of like Elliott wave theory and all that is this kind of pattern here.
Mm-hmm.
I think everybody that's looked at charts for a while has seen that. And the idea is that from this low to this high, you have this retracement here. And like, if I was going to put it kind of how I would, is that at 50% of retracement would be roughly here. And then oftentimes is if you've traded for any amount of time, you've probably got stopped out of a trade and then it kept going in the direction you had hoped. And that's the market's uncanny ability to wick you out right before it goes the way you wanted. And it's like that little extra amount. And so Fibonacci traders, they'll use this tool here and they'll measure from here to here. And then what they consider to be like the golden pocket is, and again, it's comes from Fibonacci and the golden ratio. And so you have the 618, and you have, this would be like your 50%. So the idea is that instead of measuring the price action, we would actually just place golden pockets within these different zones. So we've got a half ATR up from open to this first line here, and then the full ATR, so from here to here, and then the same thing for these two ranges down here. And so in the settings, you can go and turn this on. And so this is what you get. And you can change the numbers. Fib traders, of course, like any other group, they have different ideas of like what the golden pocket is. And so you can go in and make the adjustments as you want. And I'll be honest, like I have plotted these on here and I've watched them, and there are days where it feels like it seems like there's a lot of good reactions off of these. Like you can see a lot of wicks are hitting these. And then there's other days where it seems like the market couldn't care less about these and it'll just, act like they're not even there. But the one thing I have noticed is like when it breaks through and when it hits one of these levels and it comes back to one of these zones, like that is the preferred method from Fibonacci traders. And they can speak up if they so choose. They might disagree with me. But like this would be the golden pocket for higher.
Mm-hmm.
And so again, it's not going to work, like all the time. Nothing does. But kind of, same thing here is like we almost hit this one. We come back, we hit the golden pocket, and we go lower. So that is the idea behind how you would use these. Where I've had some decent luck with these is on futures. So ES futures, NASDAQ futures. I find that you can grab pretty decent little scalps using these. Just 10-point scalps. So you can do pretty well with those on a futures contract, for example. Right. So my opinion on these is I would rather let the day kind of build out some and see if the market is really interested in like these areas. Mm-hmm. And then if they are, that's great. You could use them. And the one thing I will say that is kind of nice is these two golden pockets around the open kind of creates like a chop zone. And it's just this kind of a nice visual. It's like, I don't really want to trade if we're inside of this. I don't want to make any kind of assumptions about direction until we break out of, either side.
Yeah, that's great. And then maybe you already mentioned it, but the colors coordinate down with that lower panel, right?
Yes. So the plot down here for the percent B, because again, you don't have to have this overlay on. The idea is that if you like a clean chart, then instead of adding more lines down here, because I think it would be a little too crowded, I just color the plot when price has crossed the golden pocket, any of the levels. So it could be just a wick, it could be the close, it could be the open kind of thing, if I'm remembering correctly. And it'll color the line to show you that it's interacting with the golden pocket. And so if you were going to use that, one thing you could do is come and change the percent B plot to circle plot. And this really has to do with how Tradingview colors their line plots. It kind of bleeds between the bars. I don't know if that makes sense, but like this one would be gold because it would start to paint the line. It has to paint them between the bars instead of at the bar. So it's just kind of like a little funky thing about Tradingview. And so I would almost use a dot plot instead so that it's colored on the bar. So exactly like this bar was interacting with the golden pocket and this one, and then kind of as we go through. So like this one's crossing open, so we're not going to see that. But yeah, it's just kind of like a little extra, thing. It's
Yeah, I think that's important though, or it could be.
Yeah.
And
So
so with that, could you go back to that and just show me where the settings were on that? Like,
yes. So the if you want to turn it on, so I guess this is another important note. So if you turn it on, if you just turn on Golden Pocket, you're only going to just see the details below. If you want to see them on the chart, you have to turn on the overlay to get everything. So you would, basically be able to toggle it that way. And then your level 1 and your level 2 correspond to the percentage between each of these. So I'll zoom in here. So like if we were to measure, I always mess this up. Yep, I just messed it up. So from what would be the low to the high, I might be messing it up again. Let me reverse it. Yeah, here we go. So then 618 would be here. And then the other number is that 65. So let's change the 786. We'll change it to 65. And we can turn a lot of these other ones off. This is just the standard fib tool that's built
yeah.
into Tradingview. And we could even make these more of a gold color and turn off the background. I think that's how that works. Yeah, I have to play around with it. You can get it to line up because that's how I tested all of this to make sure it worked.
Yeah.
But
Yeah, that's
might
just where you do it though.
oh, here it is. No, I was wrong. It's from the open. There it is. So that's how you get that.
Oh,
So
I see.
instead of having to do this manually, like if you're diehard fib trader, the indicator could do that for you. And so if you want to change it, like you want, I don't know, if you want like 7.5 or 7.68, for example, is another popular one, then you would do that. And we'll change this back. And so that's how you would see it.
All right, great. This is great. Every time I meet with you on this, you blow my mind. And this is just for anyone new, this is like just the tip of the iceberg. He's got a ton of stuff, really.
Yeah. Yeah,
Uh,
I think this year I've probably put out uh, at least probably 10 plus different things. So
yeah, which is amazing. And then like but it goes, but you have a lot of stuff from before too. You've got a whole collection. So I'll include links to all the different various ways to get to you below the video. But what's the best way to see all your work and to be able to use it?
yeah, so I think I am decently active on X, but the place I'm most active on is Discord. And so we do have a Tradeseekers Discord. It's free to join. Just to have a basic place to talk trading and talk different tools, macro market context. We use a lot of things like market internals. I'm real big on market internals. My YouTube channel is another place to go view a lot of my content and kind of how I use not this specifically, but a lot of the other work that I've published. So yeah, you can find me kind of all over the place, but TradingView, actually my TradingView page has a link to my YouTube, my X account, and an invite link to my Discord.
Okay, cool. And I'll be sure to include that below, as well as direct links to each of those. So
Awesome.
hey, thanks so much for doing this. I hope to do more of these with you. This is so informational and super useful. And I can just see how this is going to be useful. I'm going to start using it Monday. And I'm sure there's a ton of people out there that will as well. So thanks for taking the time to come on and do this with me. I really appreciate it.
Yeah, no, it was my pleasure. I have a lot of fun showing this kind of stuff off, and I hope it ends up helping people. So
Yeah, I'm
that's the
sure it
goal.
will. It will. All right. So until next time, I'll leave those links below and we'll see you in the next one.